Well, everybody, markets are down very bad over the past few days and the past week as a whole. As you're looking at right now, my portfolio was down 8.89% over the past week alone and a down $1,064. This is probably the biggest loss my portfolio has seen yet in a single week. So, not necessarily the best thing you always like to see in your portfolio, but this does offer for better buying opportunities. And I'm going to continue to buy and buy and buy because I believe in the markets long term, whether that be a multiple year process or 1 week process. I still believe in the markets, I believe in the economy, and I see things in the long term playing out pretty well. But let's go ahead and talk about what's going on in the market as a whole, why the entire market is down incredibly bad, and what the future kind of looks like for right now. But before I do go into that, all I ask, if you enjoy this type of content, that you subscribe to the channel, you turn on post notifications so that you don't miss out on any of my future videos. Thank you for stopping by, leave a comment, give the video a thumbs up, but let's go ahead and get straight into it. So first up, we're going to be talking about this. US inflation rate reaches 8.6% in May, which is a 40-year high. So I saw an Instagram post saying that these are the highest inflation rates since here it is right now. It actually says right here, since December of 1981. 8.6%. That's absolutely insane. Hypothetically, if you had $1,000 in a bank account and inflation was this high, your $1,000 in the next year would have like a buying power of like $910, $915. So that's kind of insane, the fact of how fast money is losing value per se, the US dollar. And, 8.6% is insanely high. Even incredible returns in the market can barely off-put that, so keep that in mind. But, with these dividends, you're going to continue getting paid dividends and things like that. So best thing you can do, in my personal opinion, remember, I'm not a financial advisor, is to continue to buy and continue to be patient in the market. But that is one thing that really caused the market to recently fall. And the second thing is, because of this, it's going to set off a domino effect, and the Fed, in order to offset inflation, needs to potentially increase interest rates. So with that news, inflation being high, which already isn't good, it makes investors and kind of the entire economy as a whole pretty much think, well, how high are interest rates about to go? Because I saw in an article, that inflation was expected to be 8.2%, compared to, I believe, was 8.3% for April, but it was higher and highest ever been 40 years. So that's not good. But US stocks have officially plunged into a bear market. If we go ahead and look right here, I'll show you from kind of about the high to where we're currently at. We're down 21.78%, which is absolutely insane. And 21.78% down, it's further than 20%, which does mean we are in a bear market. But, historically speaking, let's go ahead and look at the max. There is dips in the markets, but there is also upcomings in the market. So keep that in mind. If we go ahead and look at the past 5 years, we are in a pretty big dip. From here, that's 21%. The COVID correction was about more. It was more than that, but it was about 30%, 31%. But some more key highlights from this article is, with the inflation, it could make the Federal Reserve's inflation control efforts more difficult. And here's a pretty important statement. After raising rates by half a point in May, an action the Fed has not done since 2000, the tech wreck, the dot-com bubble, Chair Jerome Powell pledged more of the same until the central bank was satisfied that inflation was under control. So more of increasing rates by half points until inflation seems to be under control. And at that point, the Fed would resume standard quarter-point hikes, he said. So they pretty much what he just said, to simply put it, is they want to increase rates by 0.5, 0.5, 0.5 until inflation is completely under control. And once that happens, hypothetically, they would only increase inflation by 0.25. So increasing interest rates by that much. And that's pretty important when you look at it. Makes the value of money, inflation makes it worse, but then it makes it harder to get this money. So going to hypothetically decrease the supply of money and increase the cost of borrowing money, which for businesses and for corporations is not necessarily the greatest thing for growth. But you got to do what you got to do. And this is the part of the economy that we're in right now. You can't always be in a green market. You got to keep that in mind. But, we usually do weekly portfolio updates. So let's go ahead and do that in my portfolio. But before we do that, we'll look at some technical analysis, just to see it. We were pretty flat in the market for about a week, almost 2 weeks. And then just absolute downfall, going all the way up from 415 down to 373, which is an insane fall. This is a 4-hour chart. If we go look at the daily chart, that's just a massive drop. We have not been this low since, what is this? March of 2021. So that's pretty shocking when you think about it. But looking at my portfolio, some numbers, my portfolio yield, my value is going down. It's got a 3.86% yield with a yield on cost of 3.29%, an annual income of $423. And then if we go ahead to my M1 Finance, we'll see my activity over the past week. I got paid a dividend from Microsoft for $2.86, and I made one buy for $26.71. I did this number because that was the amount of dividend income I made for the month of June, so I just reinvested it all into my portfolio. If we want to go ahead and look, it went strictly into NVIDIA, which is kind of shocking, but let's go ahead and look at how my portfolio did overall over the past week. Tech and cloud computing down 10%, $372. And then we have income down 6%, banking and fintech down 9.6%, real estate down 9.1%, consumer and stores down 9.27%, and restaurants and food down 8.38%. So as you can tell, the portfolio is doing pretty poorly right now, but continue to buy, continue to hold, being patient within the process and trusting that my investments are correct. These companies, these funds that I'm invested in, I do strongly believe in, and I have no doubt that in the long term, this is just going to be a little bump in the road that is actually beneficial because you're getting to buy at better prices and getting to experience the kind of seed of the fruit, the juice of the fruit, however you want to call it. I don't know the exact term, to be honest, but it's the best way to get best returns. And it's all about the psychology of investing. You can't always expect markets to be green and going up and up and up. If it was like that, everybody would be printing money. There's a reason why investing is not just put money in and it goes up. When you check your investments, there's a psychological effect. You see your money go up, you get happy. You see your money go down, you get sad, and you think about selling. So you got to be patient. You got to understand that this is what it takes to be a good investor, is seeing the clear and having a kind of clear vision when it comes to bear markets. But that's going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel, turn on post notifications so that you don't miss out on any future videos. Thank you for making it to the end of this one. Check out M1 Finance if you haven't already. Use the link in the description down below. You get some free money. Go get it while you can. Go buy these stocks on discount. But thank you again. Give the video a thumbs up. Leave a comment with your thoughts. And I will see you at the next video.